Do you think becoming a millionaire requires a massive investment or owning a big business? Think again. In reality, reaching those million-dollar milestones is all about making smart financial choices, and it's proven that you can easily start on the path to wealth with just $5 a day. Imagine every single day you manage to save just $5. It could be the change from your morning coffee or the few dollars you might spend on a quick snack during a break. Now, envision what could happen if you carefully saved and invested that money instead. With the right strategy, this daily strategy can be a ticket to your million-dollar dream, and it's actually achievable. In this video, we're going to unveil the proven steps to build wealth and show you how you can become a millionaire with $5 a day. By the end of our video, you'll have the right strategy and mindset to turn any amount of money into a millionaire mark. So subscribe to the channel and let's embark on this journey to financial freedom together. Now, before we move forward into the strategy of becoming a millionaire with just $5 a day, there are a few key points we need to clarify. These are mostly common misconceptions that can be a major hurdle to reaching the millionaire mark. First off, if you ask someone how to become a millionaire, you might hear, "Save and work hard." But let me tell you straight, it's not just about working hard and saving. That alone won't make you rich. To put this into perspective, consider this. If you save $5 every day at the end of the year, you'll have $1,825. Multiply that by 100 years, and you only reach $182,500. Even after a century, you're nowhere near millionaire status just by saving. This point really hammers home why we need more than just hard work and savings. Next, let's address a sneaky little thing called inflation, the tax on the poor. If you just leave your money sitting in a bank, it's going to lose value over time. Prices for everyday items like milk, bread, and gasoline keep climbing, which means your dollar buys less and less as time goes by. So, the strategy here involves moving your money in ways that protect it from inflation, ensuring it retains or even increases its value. This is one of the proven milestones on the journey to becoming a millionaire. Remember, this isn't about rushing the process, it's about ensuring survival and building wealth. Now, on to our third point. This is a long-term strategy. Whether you're young or not so young, you'll find that time really does fly. It's crucial not to rely solely on government pensions for your retirement. Often, they're much smaller than expected and can lead to financial struggle. The best plan is to create your own pension through smart investing and consistent saving key steps to achieving those millionaire milestones. We'll talk about various ways to accelerate this process and protect your wealth against inflation in the later part of the video. Stay tuned to learn more about these proven strategies. The fourth thing is that in school, we learn about history, religion, and even languages, but rarely about managing money or investing. Financial education should be a fundamental part of our schooling, yet it's often overlooked. Understanding how to manage and grow your money is very important, and it's something everyone should be equipped with. Without knowing how to manage your money, there is no way you could amass a lot of wealth. So financial literacy is super important. We already have a comprehensive video on financial literacy on the channel, so check the link below after this video ends to know the basics of money management. Robert G. Allen famously said, "How many millionaires do you know who have become wealthy by investing in savings accounts?" I rest my case. This quote aligns perfectly with this point, emphasizing the importance of smart investing over simply saving to achieve millionaire status. We'll be using this principle to guide you on how to transform $5 a day into $1 million. All right, let's delve into the strategy of becoming a millionaire with just $5 a day. This isn't rocket science, it's pretty straightforward, almost as simple as a three-legged stool. Nothing too complicated. The first leg of our stool is the money itself, the $5 a day that we're going to invest. Whether it's $5, €5, or even 100 yuan, the key here is consistency with an amount you won't even miss. Think about those little expenses that slip through your fingers every day without a second thought. A cup of coffee, a magazine, a soda from a vending machine. These are the small yet significant milestones in your journey to wealth. The most crucial part of this strategy is to pay yourself first. Every single day, set aside that small amount as if you're repaying a personal loan to yourself. This is your investment in your future, a proven method to build your wealth and step confidently towards that millionaire status. Moving to the next step, which you might have guessed, is all about where to put that money. As we've discussed, if you just stash your cash and do nothing with it, inflation will eat away its value over time. So we're going to invest those daily savings in one of the oldest investment vehicles around the stock market. Specifically, we're looking at the S&P 500, an index that was created way back in 1923. Comprising the 500 most significant companies in the U.S., it's had a pretty consistent upward trajectory over the years. Despite some down years, the overall trend is growth, with average returns 10% annually. And how do we invest in the S&P 500? Through something called an index fund. These funds are great because they mimic the performance of an index like the S&P 500. You can buy and sell shares of these funds just like you would with stocks. An example of such a fund is the Vanguard S&P 500 ETF, known by its ticker symbol VUO. It's managed by Vanguard, one of the most reputable and stable investment firms. This particular fund tracks the S&P 500 closely, offers good returns, and charges low management fees. Warren Buffett, one of the wealthiest people on the planet, famously said, "If you don't find a way to make money while you sleep, you will work until you die." This investment strategy is exactly what he's talking about. It's about making your money work for you, growing steadily over time, even when you're not actively managing it. So the first step is that you must invest your money, no matter how small it is. Moving forward, the next strategy to become millionaires with just $5 a day is about harnessing the truly transformative power of compound interest. Albert Einstein once referred to compound interest as the eighth wonder of the world, highlighting its potential to grow wealth exponentially. This principle is the cornerstone of our investment strategy, where even modest sums, consistently invested, can grow into substantial amounts over time, marking significant milestones in your financial journey. Compound interest works by earning interest on your interest, as well as on your initial capital. This means that with each passing year, your investment base grows larger, accelerating the rate at which your wealth expands. It's like planting a tree. Initially, the growth seems slow, but as time passes, the growth becomes exponentially greater due to the expanding base. The same proven principle applies to your investments. By understanding and applying this concept, you're setting up powerful milestones toward achieving millionaire status. Let's take a look how this plays out with our $5 a day strategy. By saving $1,825 annually and investing this amount at an 8% to 10% interest rate, the power of compound interest kicks in significantly over the decades. I understand the hesitation when thinking about a 50-year timeline. It sounds like a lifetime. However, consider this. Time will pass regardless of what we do. Wouldn't you prefer to look back and see a mountain of accumulated wealth rather than wonder where all that money could have gone? To make this concept more tangible, let's visualize the results with some real numbers. After 10 years, with continuous investment and reinvestment, you could have around $30,000. If you merely saved without investing, you'd have about $20,000. By the 20-year mark, the difference becomes more pronounced, about $91,000 in your investment account versus $38,000 if you had simply saved. At 40 years, your proactive investment strategy could net you over $500,000 compared to a mere $74,000 from savings alone. Finally, at 50 years, you reach the milestone more than $1 million accrued from just $5 a day, whereas straightforward saving would have yielded just under $100,000. These figures aren't just numbers. They represent financial security, freedom, and the impact of making smart financial choices early on. It's about setting a foundation that grows stronger and more fruitful with each passing year. Warren Buffett's journey offers a practical example of this principle in action. He started investing in his youth and has often spoken about the benefits of compound interest. His strategy wasn't about making occasional big gains. Instead, it focused on consistent, long-term growth. His success is a testament to the power of reinvesting returns to generate even more wealth over time. So what does this mean for you? It means that by adopting a disciplined investment strategy and understanding the mechanics of compound interest, you are essentially planting seeds that will grow into a robust financial future. You aren't just saving money, you're building an empire, one $5 increment at a time. This strategy isn't just about preparing for an unknown future. It's about actively creating a prosperous one, ensuring that when you look back after 50 years, you see a life well invested and a legacy built on wise decisions and steadfast patience. Now, before moving to the next strategy, one thing we need to emphasize is that in order to become millionaires with just a modest amount set aside each day, we must focus on 3 essential rules. These guidelines are straightforward, but crucial for maintaining the momentum in our investment strategy. They are the proven milestones that pave the way to wealth. They ensure that even amidst life's unpredictability, we stay on track toward our financial goals, steadily advancing towards that coveted millionaire status. Rule number 1 is keep investing periodically. It's the most obvious rule, but also one of the most important. There will undoubtedly be times when you can't invest daily. Life happens, expenses might pop up, or the market might be more volatile. In some months, the price of shares in the fund you're investing in might exceed what you can contribute from your daily savings. If this happens, don't stress. The key is to remain flexible. Instead of daily, you can switch to investing every 3 months or even every 6 months. The critical part is that you continue to invest on a regular schedule. It's about the rhythm, not the frequency. Warren Buffett himself has been a proponent of regular, disciplined investing rather than trying to time the market. Rule number 2 is about to always reinvest your profits. This is about letting compound interest work its magic. When you earn dividends or profits, don't be tempted to cash them out. Reinvest them back into the fund. This means buying more shares and thereby increasing the amount of capital that is working for you. This continuous reinvestment fuels the growth of your investment significantly over time. This principle of reinvesting dividends is a cornerstone of Buffett's long-term investment strategy, which has led to remarkable wealth accumulation over decades. Rule number 3 is that consistency is key. Your contributions should be consistent and disciplined. It's easy to get sidetracked by short-term market fluctuations or personal financial demands, but the strength of this strategy lies in its steady, unwavering application. By consistently investing your set daily amount, you harness the full potential of the investment's growth over time. This rule is similar to the advice given by successful investors like Buffett, who emphasize the importance of sticking to your investment principles. Now, let's explore how we can potentially accelerate the journey towards becoming a millionaire. Adhering to these rules provides a solid foundation for success, but there are strategies to enhance the growth of your investments, marking key milestones along the way. One effective method is to seize additional opportunities to save and invest. For instance, if you receive a tax refund, a work bonus, or any other unexpected windfall, consider allocating a portion of that money to your investment portfolio. Moreover, as your financial situation improves, be it through salary hikes or reduced expenses, incrementally increase the daily amount you save and invest. Even an additional dollar each day can have a profound effect on your investment's growth over time. By adhering to these simple yet proven rules and seeking ways to augment your investments, you can expedite your path to financial independence and wealth. Remember, the route to millionaire status isn't a sprint. It's about endurance, consistency, and intelligent financial practices. Keep your focus on the ultimate goal and persist in making savvy investment choices. All right, now, the third strategy to become a millionaire with just $5 a day is about how we accelerate our journey toward that $1 million mark. There are several strategies you can employ to potentially speed up the growth of your investments, making the process not only more efficient but also more exciting. The first and most straightforward method to speed up your investment growth is to simply increase the amount you contribute daily. While we've been discussing starting with $5, if your financial situation allows, boosting that amount can dramatically decrease the time it takes to reach your financial goal. For instance, if you double that to $10 a day, you're effectively doubling your yearly investment, which means you could potentially cut the time to reach your target in half, depending on the market's performance. Even a small increase, like an extra dollar or two each day, can significantly impact over time. Remember what Warren Buffett says about savings. Do not save what is left after spending. Instead, spend what is left after saving. Applying this mindset, if you prioritize your investment contributions, you might find it easier to increase them over time. Next thing is timing. Timing the market can be tricky, but there's a strategic advantage to starting your investment when the market is low. This doesn't mean trying to time the market perfectly, something even seasoned investors can't consistently do. But having a basic understanding of market cycles can be beneficial. Starting your investments during a downturn means you're buying shares at lower prices, and as the market recovers, you gain more from the upswing. While it's often said that time in the market beats timing the market, being mindful of economic conditions when you begin can certainly give you an edge. As the saying goes, be fearful when others are greedy, and greedy when others are fearful. This wisdom from Buffett encourages investors to consider going against the crowd to benefit from market opportunities. The third way to reduce the time it takes to become a millionaire is to aim for higher returns, which might involve taking on slightly more risk or adopting a more active investment strategy. While the average return might hover around 7–8% for many index funds, exploring certain sectors or stocks might unveil opportunities for higher potential returns. This is a milestone in active portfolio management. Choosing specific stocks or sectors based on diligent research and current market trends can potentially bolster your profits. However, active investing is a proven method that requires a deeper knowledge, dedicated time, and attention, and it inherently carries greater risks. It's essential to arm yourself with education and possibly consult with a financial advisor to craft a strategy that aligns with your risk tolerance and wealth-building goals. Moreover, you could diversify your strategies. Maintain your foundational $5 a day plan while allocating a smaller sum, like $2 or $3, to more speculative investments, balancing safety and growth potential on your path to wealth. By combining these strategies, increasing your contributions, timing your initial investments wisely, and seeking higher returns, you can significantly accelerate your wealth-building process. This isn't just about reaching a financial goal. It's about adapting the journey to fit your personal circumstances and ambitions, making the path to financial independence uniquely yours. For inspiration, consider the story of Peter Lynch, one of the most successful fund managers who emphasized investing in what you know and taking advantage of market cycles. Lynch's approach demonstrates the value of an informed strategy tailored to personal strengths and market opportunities. In summary, while our core strategy begins with a modest $5 a day, the path to becoming a millionaire is adaptable. Fine-tuning your investment amount, discerning the optimal moments for investment, and boosting the profitability of your investments are all customizable aspects that can be shaped to fit your unique financial journey. These are the proven milestones that can accelerate your progress, aiding you in reaching your wealth goals more swiftly and efficiently. Last but not least, the purpose of this video is to educate you on various aspects of investing and not to give you any specific investment advice. Investing involves risks and uncertainties, and you should always do your own research and consult with qualified professionals before making any financial decisions. However, past performance does not guarantee future results, and you should always consider the risk of investments before putting your money at stake. Now, if you found this video helpful, I highly recommend watching my next video, which is the perfect complement to this one. Thank you for joining us today. And don't forget, share, and subscribe to our channel. Your engagement is like applause for our efforts, and it motivates us to bring even more valuable content your way. So feel free to drop a comment below. I appreciate your support, and I see you in my next video.